Hi, it's Thomas Cook from Toronto's real estate team at RE/MAX Hallmark, and here is our November 2011 Toronto real estate market report. November's average sale price was up compared to 1 year ago, but the listing inventory was lower. We're going to talk about what's special about the November market as we go through this month's report. So, let's review some of the Toronto Real Estate Board statistics. November MLS sales totaled 7,092 houses and condominiums in all the districts. This sales number was barely changed from October and came in as the third best November in TREB history. 34.1% of the market sales were condo townhouses and high-rise suites, with 2,418 units changing hands during the month. Sales for the first 11 months of this year totaled just over 87,000 homes, on track to have an annual sales result of over 91,000. This would make 2011 clearly the second best year for sales in the Toronto Real Estate Board's history after 2007. The November average sale price came in at $480,421, up 9.7% from 1 year ago and up 8% from the first 11 months of 2010. East of Yonge and south of Bloor in the CO8 downtown TREB district, the condo sales price average was $422,000, while west of Yonge in CO1, the average was $416,000. No one seems to have a handle on why the listing inventory is so low this year, although there are some speculations about lack of confidence in the economy and in job stability. Even CMHC is mystified by the lack of moving up or down in the marketplace, but does hope that inventory levels do improve in 2012. Combine that low inventory with near record sales, and you have the real reason why the average sale price is up so much this year. 62.1% of sales fell in the $200,000 to $500,000 price range, and homes sold in an average of 29 days across all the Toronto Real Estate Board areas and in 27 days within Toronto itself. As you can see from the graph, brand new listings coming on the market in November were higher than last year, but about equal to 2008 and 2009, keeping up a positive trend which first began in July. Overall listing inventory, however, has been down every month this year compared to 1 year ago, although the difference has narrowed since September. Let's hope the trend continues and more house and condo inventory shows up throughout the remainder of the fall market, giving buyers more choices. When we look at this Toronto Real Estate Board sales graph, we can easily see that the sales numbers have been almost steady since July. Unlike the spring market, where we saw a significant spike up in the months of March through June. Sales in November were up 8.9% from November 2010, while the listing inventory was the fourth lowest since 1999. There were just under 2% fewer condos and houses on the market this year compared to last. The sales to listings, or percent chance of selling ratio, is how we determine what type of market we're actually in. 24 to 28% is a neutral market, below 24% is a buyer's market, and above 28% is a seller's market. In November, that ratio moved up again to 45.6%, a busy seller's market and not far off the extreme market we've been through during the spring months. And that figure is actually up just over 4% from last November, when the combination of increased interest rates and the implementation of HST were a damper on the fall real estate market. Mortgage rates have continued to be very affordable, and a 5-year fixed-term mortgage can now be had for around the 3.5% mark. Actually, one of the lenders we work with has a special rate of 2.89% available right now for a 3-year term, if you're able to close by the end of January 2012. That's 2.89% for a 3-year term, but closing by the end of January. Call me directly at 416-531-9680. That's 416-531-9680 to get the lender's information. The average sale price in November was up 9.7%, a significantly higher number compared to the 7.8% year-over-year figure in October. As you can see from the graph, every month this year so far has exceeded the average sale price numbers for the previous 3 years, and that's expected to continue. As some slight comfort, the average sale price year to date compared to the first 11 months of 2010 is up a more moderate 8%. I certainly get nervous when I see yearly increases above the 5 to 7% range. I don't think anything above that is sustainable, and I don't think that high a year-over-year appreciation rate is healthy for the market long term. What has to happen for this to change is either an increase in listings for sale, which would take the pressure off the supply side of the equation, or an increase in interest rates, which would make monthly payments more expensive. CMHC predicts that interest rates will remain as they are for another 9 to 12 months, at the very least, so we can't expect them to solve the problem. The difference in the average price and activity east and west of Yonge Street and south of Bloor in the prime downtown condo markets has reversed itself this month, with CO8 east of Yonge having a higher average sale price. Downtown condo average sale prices were up 7.4% in CO1 west of Yonge and south of Bloor, and up by a big 15.4% in CO8 east of Yonge and south of Bloor compared to 1 year ago. Interestingly, in November, downtown condo sales east of Yonge dramatically outperformed the total Toronto market in terms of year-over-year appreciation, putting to rest the urban myth that the condominium market is oversaturated. Lower inventories in both TREB districts compared to October caused the CO1 ratio of sales to listings to be a busy 41.1%, and the CO8 ratio being a hectic 53.2%. We expect there will be more new condo buildings completed and occupied this fourth quarter and into 2012, so watch for inventory to increase slightly both east and west of Yonge. I attended a Canada Mortgage and Housing seminar this week given by Sean Hildebrand, where he gave their projections of what we can expect in 2012. CMHC is definitely worried about the influx of so many brand new condos across the GTA. It's the first time I've actually seen a CMHC official take such a stance. This year it's expected that over 27,000 brand new condos will have been sold by builders, compared to an average of 17,500 units sold per year between 2005 and 2010. The most alarming fact is that over 70% of these new suites are being purchased by investors, with many of them coming from overseas. The only positive to this is that the difference in cost per square foot for a resale condo versus one of these new suites has increased to about $150. That means the resale condos are priced more modestly and have a long way to go before their pricing reaches the elevated levels of new construction. So where are the opportunities available to Toronto home buyers and sellers this month? If you're a first-time buyer, now's the time to plan for how you can increase your down payment with free money from the federal government. With the Home Buyers Plan, you can add several $1,000s to your down payment by following just a few important steps. Go to freegovernmentmoneyseminar.com, that's freegovernmentmoneyseminar.com, and sign up to attend one of our free 60-minute seminars covering the complete process. A terrific opportunity for buyers to take a look at what's available in interesting neighborhoods is to join one of our market experience tours. They go out daily and are customized to specific areas of the city and price ranges. Go to dailytorontohometours.com, that's dailytorontohometours.com, and put in the ideal day and time for the tour you'd like to join. Are you a bit curious as to what most Toronto buyers and sellers are looking for and appreciate in the realtor they decide to work with? Check out whatpeoplearesayingaboutus.com. That's whatpeoplearesayingaboutus.com. And watch videos with real people telling real stories about their real estate experiences. It's almost like a reality show on TV. All the best, and check back here in early January for the December year-end Toronto Real Estate Market Report. Have a great holiday season, be safe, and we'll talk to you in the new year.